Yeah, I mean, I guess we have a different approach. We are not going this line in raising a fund. We are not focusing on a fund. We are only focusing on club deals or a JV, which means when we see a deal, then we're going to go out and raise the capital simultaneously, which is more challenging, but it depends a little bit how your relationship with a certain group of investors is. Coming back to what you said, and that I just mentioned that because this gives us the opportunity to also invest in smaller deals. And this is what we see now in Spain or also in the Netherlands. I mean, when you have raised 5.5 billion based on a 20+ return for Europe, you can only have a look on deals being bigger than 150 or 200 million. Otherwise, it doesn't make any sense. So coming back to Madrid, I mean, if you see today how packed the restaurants are and the faces you see over there, you all have seen them over the last 10 years, or most of you have seen them over the last 10 years with other batches, but these are still the same guys running for the golden deal, running for large portfolios, which are not there. I mean, they have sold their investors capital for 20+ based on large portfolios, which they don't find. You do not find any portfolios without the Octopus portfolio, for instance, in Madrid, or, I mean, they are mainly focusing on Madrid because Madrid is the largest part of the GDP, etc., etc. You do not find it there. What are they doing now is they're just going to move over in some developments. I mean, an opportunistic player is not born for doing developments. This only matches because this is the only way you get 20+ on paper. But this is a super workloaded thing, and honestly, who really understand the development business was never done that before. And I mean, the normal or the ordinary opportunistic approach, if you see what has happened over the last 10, 20 years from US investors, from other investors, is always to step into the market based on the right momentum. And please, we do not want to work. We can structure it in financial ways, and all the advisors can help us, and we put debt on it, and we are super clever, and we have our Excel sheets and everything. And then the market comes, and then the prices comes up. That's what we've seen in the past, and this is how they made the 5x and more equity returns. What they're doing today is not the same. It's a totally different play. And what we've seen now, and this is for us the guarantee that we make some money, is when these giants as Blackstone is only doing a press release, hey, we just visit now the Netherlands, that is a perfect guarantee that prices will increase over there. So what we do is just go there, look for some deals below the radar screen, 50 million, 40, whatever, 30 million, which cannot be followed up by the privates. 30, 40, 50 million is a little bit too big for them, but it's still too small for the bigger guys. So I guess this is a niche, but the overall approach now and the overall environment is really tough. And I totally agree what Paul said. I mean, if Madrid is fully packed with private equity guys. You will see Amsterdam and now Italy. I mean, they have tons of money, and by the way, it doesn't matter when they use $1 million or $2 million for that deal cost. This even you do not see that in a 3-4 billion fund, or even not in a billion fund.
It's interesting. In Spain, there's been 3 listed cash vehicles established to invest in Spain, and I think they're all trading at a premium to cash. They've hardly ever haven't made many investments yet, but they're trading sort of above the value of the cash that's come in. And quite often, quite a lot of the investor base are actually hedge funds who are just making a macro play, holding the shares on the assumption that there'll be a trade them fairly shortly, where there's a sort of further increase in value based on current sentiment.
So this is very much a macro play, expecting the market to go up, and again, taking your point there of not getting down and dirty and managing the assets and turning it around, but actually just waiting for the macro picture to improve.
Well, it is, but I think also some of the funds, if they buy an operating business, it's all about probably building a platform. So they have to it's partly identifying assets which are under CapEx, And so I think they do have to work on their assets in a way that they didn't previously in the previous cycle. So to that extent, I think it is a different business plan. But in some ways, you could say, well, there's too much money going into Spain based on the Spanish economy, which has still got very significant unemployment, etc., and the euro problems are still there. But quite a lot of these plays, you don't need to wait for the economy to turn itself around. You just need to wait for that next change in perception of sentiment, and then you can sell it on quite quickly. I think some of the business plans are based on that premise.